The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon Eastern Time. Love to hear from you. 877-927-6648, of course. And the Dow is down 400, let me just check, 400 points at 15,611. S&P is down 50 at 1830. Composite index is down 132 at 4,344. The VIX is at 2964, up 3.59, up 13% just on this one day alone. And the trend, funnily enough, is only at 1.38. It should be at about 2.30 at least right now. It's not such a good thing. I'd prefer to have it skyrocketing and giving us a signal that there could be a bounce. Anyway, let's move on. And we're looking at I just want to do this right now because we spoke about it yesterday, and I want to go through it again today. The IWM is down, if you can type it correctly, mister. The IWM is down 2.92 at 95.87, down almost 3%. Leg F to the downside, stochastics at 10%. We're getting real close to where there should be attempts to find some kind of a support, some kind of a reversal, because let me move this 120-minute chart out the way right there, because within the context of all the different technical parameters we're looking at, in most cases the stochastic is in the double digits, down at about the 10-11% area, and we're getting real close to the single digits, and that's where the single digits is where you can see a very sharp V-shaped reversal. At this particular point, you can see, I'm going to just draw this out, I don't even have to draw it in. You can see that the 129, that the single leg down from 129 to 106, let's call it 107 because that would round it out, in the IWM with a bounce back to the 120s. If you take that away from, and I'll measure it, I'll show you what I'm talking about. There's an A to B equals C to D. That is in the parlance, the bolt, the lightning bolt configuration, where A to B equals C to D, and lo and behold, we've extended beyond that. So options expiration this week. I would not be surprised if just a little later on, maybe today's Wednesday, I prefer if it wasn't today, maybe Thursday, we can see a turnaround that allows the options, those options that were expiring, those call options that were expiring at 0.03 or 0.05 or something like that, suddenly come alive with a bounce. We'll see, because Dave White has a show tonight, a webinar for subscribers, and you can join and you can sign in by getting a free I think it will be a month. I'm not sure if it's 2 weeks or a free month, just by signing in, being able to go to the workshop, because Dave gets some fabulous, very often he gets just fabulous instruments in the options area for reversals in the market going into options expiration. I believe I will be trying to do that myself a little later. By tomorrow, I should have some clue as to what we could pick as what we call white lightning. That's options expiration strikes that are prices diminishing with the potential for a very sharp uptick going into Friday. So let's go through the numbers here. We've got the Dow, as I said. Now we're going to go to the gold, because gold is having a nice rally. It's up 12. Should be up way more than that. Anyway, at this point, it's up 12, and we're looking at 1102, and I might be behind, so maybe it's up about 13, but it really needs to clear 113.10 in the continuous contract to start leg D. Now, talking about leg D, that's so for gold to be a fear factor, this here is just normal action, just bouncing up and down as per the dollar mirror image. What's really important is that in terms of the gold, if this is really a fear factor, by the end of the day, you should see gold up not 12, not 20, but something like $30 to $35. That would suggest that gold is going to continue to rally as the market continues to pull back. So somewhere along the line here, there's a little bit of a disconnect and there's a little bit of disbelief. So we're watching this closely because that little doji candle from December going into the candle that we're looking at in the monthly, so close to the 200 period exponential moving average, says, hey, be careful. This could be the very first time that gold actually becomes a play of substance rather than just these little bounces that fade very quickly. For those of you who are doing intraday trading, we just made a low of 1817.25. That's amazing. Just an hour and a half ago, we were up at 1852. So that's 30 points. There could be a little bit of a bounce here that I'm looking at, and we'll see. This is a 10-minute chart. Yeah, this is a 10. I wonder what the 1-minute chart is saying. Yeah, 1-minute chart is in leg B. Yeah, the 1-minute chart suggests that we might test 1827.50, and if we can break above that, the next level will be the 1832 level. So any reversal back to the low of the day would be really negative. So we watch that to go together with us. Now, I told subscribers that I'll do an update around about 2:15, 2:30, because there's a chance, and it's a very negative thing, if we were to reverse to the upside now without a climactic throw-up type decline, that just every rally fails and it goes to lower lows. We've sort of seen that, but it hasn't been as vicious as I would have expected. And the VIX hasn't gone to a new recovery high above 30.95. So as I'm looking at it right now, the VIX is at 29.27. So it has maybe 2 points to go. And that'll occur if there is another smash to the downside. And then we'll be looking to see, it's a little unusual to have it on a Wednesday, but you never know. Then we'll be looking to see if there's going to be a reversal to the upside that can rally through maybe Friday, and then Monday we start down again, something like that. All right, that's the scenario I wanted to show just on a very short-term basis. Now, I needed to look at the dollar DXY. The dollar DXY is at 98.90. It's pulling back. Isn't it amazing? Let me make this much thicker now. Wait, do that. Look at that. Let me make this green, because if it breaks above, it's a very positive thing. Look how that declining trend line has held back the dollar's rally. These symmetrical triangles are quite cunning because they are. As you get to the breakdown or the breakout point, you think, okay, great, now finally it's going to break down. And what happens is the darn thing just reverses. You don't expect that it can actually do that so many times, and then it reverses back to the other side. So we're watching this, and I'll just make it real clear. If the dollar breaks 98.50, it's at 98.94, closes under 98, I'm going to be a little safe. I'm going to say if it closes under 98.38, the low that was made on the 15th, that's a very that's kind of negative for the dollar because it suggests it's going to go down further. And if it breaks above the high of yesterday, 99.31, that's going to say, great, now it can go up towards the 99.63 level of the 5th of January. Basil Chapman, Tiger Technicians Hour. I'll be back. Dow's down 390.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So a little rally attempt here. Let me just show you this on the 1-minute chart. You haven't broken that level that we spoke about before, the 1827s. I think we're going to try. If we break that, then you get a nice little bounce coming up here, and that's going to be the real test. And as was said, and JB said that I often mention, on volatile days at about 11:20 or so is when the real market steps up. After all the messing around, down, up, down, up, down. And on just normal days, I would say by 10:15 in the morning, that's Eastern time, you get that's when all the fussiness is out the way, where funds who have had to put in their buys or had to put in their sells, or there's a gap up and you get a pullback. That's kind of where the regular market will start. So we'll see. This is a very important session for two reasons. One is, let me show you the Dow chart right here. Look, the Dow chart has 15,370, the low of August, as a potential target. We went down this morning to 15,573. That's 200 points above. So this is where you start to see, as you're getting closer and closer, does it become a magnet? And then if the price just slices right through, remember I had this left side, right side price time match. I had two different ones. Both of them came in about the same day. One was for the 15th, and we're already now in the 19th, 20th. And the other one was at right there, and that was yesterday. Yep, into yesterday. And yesterday we did not, we haven't held that low. So we've gone to a lower low. So now what we're looking at is any rally that comes from here is just a purely overbought situation. I need climactic lows. Like this one here was a climactic low. Remember, I made a big deal about this. Still can't understand it to this day, how the VIX index, let me just move this to the side. Nope, wrong one. Let me move this one to the side. How the VIX index in August, let me just go to the VIX, VIX.X, managed to scream to the 53.29 level when there was nothing like the bad news that there is now, or the feeling of bad news. So this is saying the upside can still be quite a lot higher if we are making stair-step moves to the upside, because the high that was made 3 days ago is only at 30.95. 30.95 isn't even I mean, you got 23 points to go to get to that crazy 53 level, and that 53 level had the market itself. Look, here we go. Had the market itself go from the August low of 15,370 all the way to 17,977. So that's over 2,200 points higher. Now we've come back down. And what's really fascinating about this, look, if I put my plumb line right here, which I did on this one, then the plumb line went to the 15th as a left side, right side price time match. Now, doesn't this feel as if it's been the most horrible period? But look, in terms of days, we've taken 2 days extra to get to where we are now, and yet we still haven't taken out the 50,370 low, and there's your midpoint at peak F on the 3rd of November. So I just wanted to emphasize that there are times where in a bear market, within a day or two, you have just smashed so deeply down that you've taken out, certainly in stocks you can do that, taken out weeks on the left side of price movement to the upside. And it's the same thing when you have a reversal to the upside. But even though it feels just terrible, does it feel as the opposite of terrible, which is joyous, from the low that was made back on August the 24th to the high of the 3rd of November? That was just there was a big move and then nothing. And then from the 15,942 level, the 2,000 point rally from September the 29th to the high of the 3rd of November, that was straight up but very steady. No big crazy, there was one crazy gap up and huge bar on the 22nd of October. But otherwise, it was pretty steady. Look at the downside. It took a long time to reverse, and then the move to the downside has been precipitous, but not as bad as those 4 candles back in August, from about the 20th of August to the 24th, those 4 days. That was really a big move. So this has been more a concerted move to the downside. Now, let's just get to the nitty-gritties. In this particular pattern you've got, I'm going to go to this chart here because you can see it a little bit better. I'm going to go to the Dow and just show you something I think is quite important in terms of technicals. The stochastic has gone in an a soft W pattern to retest the left side low, and it's trading at 8.89. Now we're in the single digits. Now we're getting closer to where there can be a V-shaped reversal. Now, if I'm looking at timing, I'm looking at sentiment, I'm looking at a number of different things. I'm also looking at the, let's just jump back here for 1 second to show you a very important tool, and that is the Trin gauge, the Richard Arms Trin Index. I call it the Chapman Wave Trin gauge, and that gave us that indication with that 3.26 reading 3 days ago. It gave us the indication that there could be a very sharp move to the upside. And we got that yesterday, and then it failed. Today is only a 126. The high is 222. So 222 is getting there, but being now at 126, it's really weird. It just says there's some disbelief out there, and that's not a good sign. Let's go to Kevin in Orlando, Florida. And Kevin, how are you?
Hey, Basil, I'm doing good today. How you doing?
I'm well, thank you.
I just want to talk to you a little bit about my concern with a couple of gold stocks that I've got right now. And I know you made the point earlier in the show that with the market doing what it's doing and gold supposedly a safe haven, how we should be up $30, $35 on the contract. My concern is, I mean, a couple of the bigger gold stocks like Newmont, we'll take Newmont, for example.
All right, NEM, right.
But a day like today, and even yesterday, with gold, gold hanging in yesterday and being up big today, and Newmont's actually down. I mean, isn't that kind of indicative possibly of this gold rally not being legitimate?
Okay, so let's just look at this. We've got Newmont Mines. The gold at this particular point, the GLD is up 1.50 at 105.48, and yet Newmont is trading at this moment down 0.03 at 1629. Had a very ugly session yesterday. That's trough A, trough B, trough C, D.
It was big volume yesterday,
E,
too.
F. Yeah. And so there are a couple of things, and it's got the pattern in the weekly chart that is that H pattern, the lowercase h, and it's got the same thing in the monthly chart. So I want to do a couple of things. I'm going to look at Newmont Mining. You chose Newmont Mining, but I think we need to look at a couple of other mining stocks. I like to just go to ASA because it's just something I've always looked at, and that's making a new unrecovery low. I'm always trying to figure out what it is. You're talking about recovery highs. This is, well, a new weekly and monthly low, and it's trading down 6 cents. This will give you an opportunity, the break, to do a couple of gold stocks and just check them out. And we'll be right back with Kevin in Orlando. Dow's down 390. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Kevin in Orlando. We're looking at gold. We're looking at gold stocks. And the question raised by Kevin, which is just a really good question, is gold is running right now. If you look at the way that majority of gold stocks, now there's some of the South Africans, for instance, Harmony is up. It's near the highs of recent highs. It's at HMY. Is at 1.66. It's up 15 cents, and the recent high 2 days ago was wasn't that 1.70? 1.73. So it's right there. It's got a fantastic weekly chart. If you're looking at Goldfields, I think Goldfields was where I was as a teenager, a little mining town on the Vaal. Yeah, and GFI, which is Goldfields Limited ADR. The high was 327 about a week or so ago, and it's trading at about 308 right now. So, and I looked at ABX, which is American Barrick, and Barrick Gold is called Barrick Gold now. It's holding okay, but if I look at Goldfields and I look at Gold Core, it's down at its lows. It's up 2 cents at 9.86. It's decimated from the last. It's gone from the 1287 level to 986. That's almost a 30% haircut in a week and a half. When I look at them, I'm saying to myself, we are looking at so many disparate areas of conflict. In other words, crude oil, normally under the pressures that we've been seeing, you would see crude oil at least have a decent bounce. It hasn't even had, I can't even call the little move from 36.32 on the 21st to 39.25. It didn't even hold. It was just 10% and then it broke down. So even the crude oil, so this is very typical of bear market action, that all news, good or bad, is perceived as bad news. So gold, if gold starts to push even higher today, and if the, let's go to the GLD, which is a little easier for people to see, if it's at 105.48. If it moves up to the 106 area, 106.10, 106.20, then all of a sudden you will get a very good observation of how the gold stocks themselves are acting. But coming off the smash yesterday and the low today, looking at, say, something like an ASA, it's off the low, but this is really very bad action within the daily and the weekly. So do you say you do have Newmont Gold, or you've just been looking at it?
Yeah, no, I've been looking at it because it's kind of hung in there. It's never got to its 52-week low like a lot of these other gold stocks during the
right. It's 62.22 is where it's at now, and the low was 15.39, so it's less than a point away, and it is turning down. So it makes it a really important moment now, because if under these conditions, let me do this. I had done back in 2008, I think it was, 2008 into 2009. I'd been talking about the XLF, and that's the financials. Now, why is it waiting for data? All of a sudden, I got a little problem. Yeah, no, it'll be there. XLF, come on. Anybody home? Oh, this market is under pressure. There it is. The XLF is at 20.78. But if I look at 2000 and let me go to where it was just, remember that was with Lehman and everything smashing to the downside. And I'm looking at gold. Let me see, put it in the same category. Oh, I'm waiting. I think there's a lot. I haven't seen, some of us will remember that for years and years and years, whenever there was a market that was under pressure, there'd be a slight delay. And this is the first time in TradeStation that I'm getting a delay at all in getting not the data, but just the charts to pop up. So here's the 2008 period going into March of 2008. Gold was rallying, and what I was looking at that particular point is I said, well, if gold is a safety haven because banks are tanking, then we can often use that as some kind of a benchmark. But for for quite a while now, we've not really had that relationship. And look, here's gold, here's the XLF coming down sharply. It had the 0.25% raise. KRE, which is the regionals, should have had a fabulous bump, at least with a quarter point. All they need is a quarter point to start seeing an improvement. And yet, from the bump, it's down from the November high at 46.33 to today's low of 35. 9 points. I would say that a 20% correction is something serious. So I'm going to go back to your question about Newmont Mining. And I'm just going to say to you, this is a case where either you're going to time the exact low right now and say at 1627, it shouldn't take out yesterday's low. If the market keeps acting weak, gold should go a little higher. And right here is where Newmont Mining should start to move up, and you'd put it onto a 10-minute chart and you'd start to see it. I would rather say to you, if you're not in it, I'd rather be buying strength than weakness. And one of the reasons is that in this particular market, weakness has begat, if you can use some kind of biblical term, weakness has begat weakness. And as a result, you've seen so many 300 points down sessions in the Dow, 30 points in the S&P since the last 2 days of December, that it's becoming normal. And that's one of the reasons why I think that the short-term trading index has not skyrocketed right at this moment. And that's the reason why I'm saying that any rally at this point, and I think we're real close, if there isn't another smash to the downside tomorrow, we are real close of at least testing. Look, oh, there goes the 120. So that was a peak D there. And now we've got a new leg, E/B. So we've got that little rally attempt that I was talking about that sometimes starts at about 11:20. We've got that. We'll see what happens. See, here's my answer to you. You'd be looking to probably maybe nibble or take a little position in gold, thinking that if it's going to move, I'd like to be there. Is that really your thinking?
You're right. Correct.
Okay. So let me just say to you, if you're looking at Newmont Mining, I probably would... Yes, it might move. I'd rather have something that's already moving a little bit so that ABX, which is American Barrick, now company-wise, they could be two completely different companies in terms of their balance sheets, their what they own, what they, all that stuff, all the fundamental stuff. Price-wise, it's had a nice move up today. It's up 29 cents at 788, and I would suggest to you, I'd rather have a stock well off its recent low, and the low was 6.90, 6.94 on the 17th, and it made a high of 883 just a week and a half ago. So it's holding better. If it's going to move, I'd rather go with something that's shown that is participating on the upside with gold's bounces. So that's the way I'd look at it. And maybe you can even have a little tiny nibble right now. And if it goes towards the high of the day by the end of the day, in other words, it's at 789, if we can get to 796, I'd say, you know what? I feel a little more comfortable. You could add just a little bit more, but I would like, commensurate with that, the market to still be down very sharply, more than minus 350 down as gold moves up. I don't want them moving together.
Right.
In other words, I want to see gold, the general market, the S&P down 40. Wow, down 47. I would like to see the S&P remaining very low. Then you've got tomorrow with a potential spike in gold, and you're looking good. I hope that helps you, Kevin.
Thanks, Basil.
Thank you very much for calling. I appreciate that. Kevin in Orlando. I'll be right back. Dow's down 390. S&P's down 47.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and if you can hear any background noise, they're cutting down the market, but they're also cutting down a tree somewhere outside there. So nothing I can do about it. That's Newton. We are the garden city. They like to keep the trees trim or something. So I was asked about Microsoft. Do I talk about the auto show now, or do I go to stocks? Yep. So anyway, the Microsoft gapped up. You remember there was that news-related gap, earnings, I think, and news at 48.95 on the October 22nd day. It's suddenly the very next, 23rd, bam, it runs up. The low is 52.25. So you've got yourself a 3.5, almost 4-point gap. And what happens? It moves to the upside and it makes a peak D in the Chapman wave. Peak D, the second goes to an E, and then it goes to a D. And a D at 56.23 on the 4th of December, it starts to pull back, and then it has a couple of little spikes to the upside, makes nominal new highs. Using that December, it goes to a peak F. That's not an FB anymore. That's an alternate count. And all it is an F, and kaplop. It starts down. Now, this is a very interesting scenario because from the December high to that 23rd gap, October 23rd gap up, what happens is it comes back down, and it is a very concerted move. It goes trough A, bounces. Trough B, a little bit lower, bounces. A little bit lower, trough C, bounces strongly, fails, comes back to a D. Just 2 days later. Then it goes up and it comes back down. Now it's in leg E with a little doji sign, and it says the 4912 200 period exponential moving average, this coral colored moving average right here, is the support. And it's really close to it being there. I look at moves to the downside that are not these huge sharp ones that you saw in August, but just very steady, lower highs, lower lows, lower highs, lower lows, with trough A, trough B, trough C, trough D, and then trough E. And that's where you start to see whether or not there's enough internal strength, if the technicals have deteriorated so much that they could be a really strong bounce. And what happens very often in a case like this is that when you get the bounce takes out at least one big bar on the left side. So that says that if Microsoft, which has been an amazing stock, is down 46 cents right now at 50.10, if it has a bounce, 51.85 is the 9-period exponential moving average resistance. So whether it does it in a few days or not, I would say that it's trying desperately to try to get back there. It tried yesterday and it failed. So that was the question. What about Microsoft? Now, here's the thing. This is peak E, and I should have, with 2.5 days to go, I should put a down arrow. I'm going to wait. I have to wait for Friday because it just went to 64% in the stochastic. MACD is negative. It had 2 down days under the 9 EMA. I really have no choice. I have to put in a down arrow. So it's in a sell mode. And that says you've got daily in sell mode, weekly in a sell mode. monthly is F/brand new A. Remember, we've got the same thing going on in General Electric. And what's the story here? Well, the story is that the 9-period moving average of 49.58, that has to hold on a closing basis. You get two closes in the monthly below that, and then all of a sudden you've gone to a sell signal to upgraded sell mode in the monthly chart. Let's go to Jim in Oldsmar, Florida. Jim, how are you?
Hi, how are you?
I'm well, thank you.
It's good to get to talk to you. I'm relatively new as far as trading is concerned, and I was kind of curious. You've been very accurate on what you've said, as well as some of the other guys on Tiger TV. I was just wondering, I know you can't really pick a bottom, but overall, the S&P 500, how low do you think will actually go? Or do we have to wait on oil to actually start turning around? Or you talk about a bounce now, that's probable, but what about after the bounce? Are we going even lower?
So, Jim, your question pertains to where would I expect that there's the greatest chance that there is some kind of a base in the S&P that is not just a tradable bounce, but a base that might hold for a while at least, if not be the base for 2016. And to answer that, I have to set aside all my other thinking about the mega move and all sorts of things like that. And I have to say, based on the monthly chart, I'm going to expand it right now so people can see it. This is the monthly on the right. This candle, the January candle, is probably one of the worst candles in points. It's the biggest point move we've ever had, I bet, in the S&P. Let me just open it out here. Maybe not. Maybe the move in October of 2008 on a percentage basis, that is a bigger move. And on price at this point, it looks to me like that's a bigger move. But this is in the category of really one of the most intense selling phases that we've seen. And it's not the kind of selling phase that you usually get right off the top. Usually you get this when you're getting closer and closer to some kind of a significant low. Look at that candle, what I call the Chapman Wave Roman candle of October of 2008. High of 1167, low of 839. We're talking about 300 S&P points, 330 S&P points. And no, what am I talking about? Yes, 300 S&P points. And now what we're looking at is a candle at this point of 2038 to 1825. So far, that's 300. No, that can't be. Is that a one? Why am I missing something here? Anyway, let me say that what I'm looking at here, the most important thing was the October low of 2014 at 1820. And today we've already gone to 1825. The power of the move down says that if we don't get some kind of relief rally in the next 2 days or so, that we not only will take out 1820, but the next level of support is at 1814 and then 1737. Those are big numbers. So I'm going to say to you, based on the weekly and the monthly, I was looking more for time, and I was saying that I think it'll be late February, early March, where we make some kind of a low. If this is one of those traditional declines, that's where I would think that we would make some kind of a low that's more than just a tradable low. It's a low that really has substantial upside potential in points and time. So that's number one. Number two, if we're looking at the S&P, if we close this week, if we close below, because we've still got the rest of the month, but if this week we close, let me just double check, when is, the month ends on Sunday, so the 29th will be the last day. So we've got a week and 2 days to go. What I'm looking at here is if this week, the S&P, this is a closing price, not intra-week, but a close. If the S&P closes under 1820 this week, any bounce that we have going into the end of January will probably only take us back to the low of 1867. That was the August low. If this week we start the bounce and that bounce continues into next week, then what I'd be looking at is that the area between 1820 to 1805, let's call it the 1800, that's going to be really important. So I'm trying to give you time and price, but can you hold on a second, because I want you to show you the kind of price action that we might see.
Sure.
Okay, so we're on with Jim in Oldsmar, this is in Florida. We're talking about the S&P. Dow's down 430, S&P's down 53. Ugly session, ugly session. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. So we've got Jim in Oldsmar, Florida, on the line. We're looking at the S&P. Jim, if you don't mind, I'm just switching to the SPY for a moment, and I wanted to show something. This red trend line that has been the beautiful support for the SPY all this time is being tested as we speak. In fact, if I put it into the monthly chart, I can show you that the corner of the candle is just touching it right now. So it doesn't have all that much to go, because at 100, it's at 182.30 right now, down 5.66. It's very rare that you ever see the SPY down 5.5 points like this. But what's interesting is that Chapman wave Roman candle that I discussed a long time ago from the August level, as my contention was that if you start trading in the middle of that candle for a couple of days during the week, we will see the test of the low of 182.40. Well, today's low is 182.30. We've broken that by 10 cents. So I'm going to say to you, if you're looking to put money in, and this is a question that goes to a couple of people that emailed me a moment ago, and one was, why is nugget down when gold is up? I told you that there's this dichotomy that's going on at this particular point. Wait until the end of the day, see if gold rallies even more. That's when you can start doing a little nibbling. But most importantly, what I'm going to say to you is, I don't see anything right at this moment that says to you that you can buy until we really get a test of both the 181.20 level on the 200-period exponential moving average in the weekly on the SPY. It's very close to that, and that coincides with the monthly chart. I think we are very close to finding out whether or not you're going to get some kind of a reversal based on the volatility index pulling back and the SPY rallying. But is this the move that I would put my money in? And I'm just going to say to you, because there's a potential for the Dow to still go down another 2,000 points from here if certain conditions aren't met, I'm going to say to you, have patience. If you want to do a little nibbling, if it goes down to, it's at 182.31, I'd say, you could do that. But if there's going to be a crash from here, I don't want you to be in it. I'd rather be buying some strength than weakness, and I'll deal with that tomorrow tomorrow, Thursday. But right now, I'm going to say, Jim, be a little careful, because if we close decisively under the 182s, you don't have that much support coming in. So give it a day or two, and if there is a big reversal today, let's say the market turns up, and all of a sudden the Dow's only down, the SPY is only down, instead of 5 3/4, it's down 3. Still gives you some time to do a little nibbling, but I think this is a lot of people are going to be looking at this and saying, you know what, I don't like what's going on. I want out, and I'd rather you buy a little bit of. I want to see how 182 holds. Let's put it that way. That's this major trend line. It's a monthly trend line. To do it intra-month is a little difficult. I'm just going to say to you, be real careful. If you want to take a tiny little position, at this point, you've got a risk of maybe 2-3 points further to the downside before there's a pretty decent rally. I'd say it depends on your willpower to be able to say, I'm going to buy just a tiny little bit of a SPY right now, and I'm going to wait. Or just saying, you know what, this is not a good market. Let's wait for some kind of turn where the daily starts to make higher highs and higher lows. That's a better way to do it rather than catching a falling knife. So I'm going to say to you, the level to watch, 182. A break into the 178s says be real careful, because the next real level of support is way down in the 173 area. Well, but yeah, 173. So this is I just don't want you to be putting some money in here when we're on the way down and we don't yet have a sign of strength. You know what I mean?
Yes. I really appreciate it, because I really respect your opinion. I've been watching you and the other guys on Tiger TV for a couple of months, and it's been really enlightening, and I think you all do a great job. And
I just wanted to say one thing, Jim. If you're kind of new to this, even if you find that you want to go long gently. Don't put everything in. Do it stepwise. Call me again next week. This time we'll talk again, okay?
Okay. Thank
you. That's Jim. Folks, stay tuned for your swim lesson. I'll be back tomorrow.
Goodbye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.